Thanks for coming across, Andrew. My name's James Beater, again, representative of Glenclair Financial, mortgage broker with a residential focus. Do you want to introduce yourself?
Yep, Andrew Chevron. I'm the owner and operator of Ralph and Ralph, which is a buyer's agency based in the North Shore in Willoughby.
Fantastic. So I thought it'd be a good point to chat because obviously there's a fair few topics that converge between buyer's agents and different kinds of property acquisition as well as mortgage broking. So great chance to pick your brain about some of the topics that are near and dear to you and see how they kind of collide with our sector in mortgage broking. Now, I've been talking a bit about those topics, and I think for today we're going to focus in on value. So value of the property and the different lenses that you can take with that, from the buyer's perspective, personal value, market value, the real value when it comes to banks' representation, and how that coincides with a mortgage broker's lens as well. Do you want to start us off? And I guess from your perspective, what are the most important factors when considering those different lenses of value?
Yeah, it's really interesting because when you're buying residential property, it's quite a challenge to work out what a property is actually worth, right? Agents do an appraisal, they work it out, they set a guide. The guide is not what it's worth. The guide is always a little bit below, with an intent that it will be within that 10% over. And as a buyer, you kind of need to do the same thing. You need to be looking at comparative analysis of other properties that have sold in the area, not necessarily the ones for sale.
Yeah.
The ones for sale may divide the market, so that's another aspect that you'll be looking at. And I often like to think of it as a property has actual value, as you mentioned. It has a value that you would expect the market to pay for it, and then it has a personal value, right? And if you're buying your family home, there is emotion involved in that. Of course there is. And working out your lifestyle, everything about how you live your life and how it fits into that home in that particular area can impact what you see as personal value for it.
Most definitely.
And that doesn't mean that you're overpaying for something. It means you're paying for the value that you see in it, which may or may not need to reach your personal value. You may be able to get it lower than what is market. You may be able to get what its actual value is.
Exactly right. And ideally, the personal value or your perceived value is higher than the market value, so that you can get it for a little bit more cost effectively than what it would benefit for you and yours.
Yeah, more often than not, it will be higher than
The reverse,
market value.
yeah. And you raise an interesting point with how you can get information on that value or those values. And I think for a lot of people in the marketplace at the moment, doing their due diligence on Saturday mornings and Saturday afternoons, seeing time and time again that price guides aren't always the most indicative thing. I think it's important to, as much with different lenses for value, there's a different lens for motivation. So for an agent, their motivation, understandably, is to get as many people through the front door to fall in love with it. And as you said, get that personal perceived value. So that price guide will not always match up identically with market value. Yeah. So you touched on it briefly, but what would be your recommendation, because you're immersed in this day to day, for how people can get a more accurate grasp on what the value of property is to help with their search?
Yeah, so I mean, I'm not opposed to price guides that you get from agents, because some buyers agents are not so keen on them. I like hearing them because it tells me what that agent expects to sell for, right? So if they come to me and they say, plucking a number, they say, this is a $2 million property, then I know that they want to sell it around probably to 150, right? That's where they're aiming for, maybe a little higher. The aim is that it sells in the higher end of 2 to 2.2.
Yep.
Right? Because that is 10%. Now, that's a great guide a lot of the time for people to sort of work it out. However, there's variable in that. There will be places that are underguided that you often spot at the first open. If you turn up at the first open and you're one of 70 groups going through, it's probably underguided.
That's right.
It's normally a good indication. There are other signs as well, but also doing your research. So looking at everything that's sold, particularly in the same street, when it's sold. Ideally, if it's sold in the last 12 months, you've got a good guide as to what it is. You can make a pretty clear comparison as to those two properties. If you're looking at apartments, same building is gold,
Yeah.
right? The difference on properties in the same building, there'll be marginal differences by the floor it's on, the aspect it's on, but it will be pretty similar. And that one's quite easy to compare.
Absolutely. And I think that for those who are not as platform or technically inclined, a great place that I tend to look, and I know you tend to look as well, is locations like domain.com or realestate.com, where you can actually look up sold rather than for sale, and sales history of even the same property you're looking at, which can be an immensely powerful way of really getting a litmus test of the real value or the market value.
Yeah, you can also play games with, if the property that you are looking at sold in the last 5 years, find out why is probably the first thing you want to go, why are they moving on so quickly?
Mm-hmm.
But you can play games with what is the growth in that suburb, right? So you can find what the growth in that suburb over that, it might be 3 years, might be 4 years, 5 years. And you can have a rough estimate based on the growth as to what that property should be worth today if nothing else had changed. Right? You can then look at comparisons. You can find the old listing of that property and have a look at the photos in it, compare it to the photos in the current listing. You go, okay, they've improved the bathrooms, they've improved the kitchen, they might have changed the flooring, that sort of thing. And you can have a good guess, depending on size of property, how much they've put into that property, and therefore how much impact does that have on that growth as well.
Exactly. And look, I think a question that could be begged is, why is all of this important? We're professionals in the industry whose day-to-day it is to know and understand this. But I think even for the prospective buyer and members of the public, this kind of time to do the research will save eons of time on those Saturdays looking endlessly for properties. I think if you can ascertain the difference between price guide value versus market value versus your own value and the bank's valuation, it's just going to save you so much time to have that understanding yourself. I think that's one of the advantages of going to a buyer's agent, for example, is that for people who don't spend their career's worth of time looking into this, you've got a pivot point of expertise to supply that kind of insight.
Yeah, and I think additional to that, the buyer themselves will get more of an understanding of what they are looking for, right? Their specific wants, their specific needs, more than just, hey, I've got a budget of this much, I'm looking for a 4-bedroom house, and I'd love to have a garage, right? Great, so that's a good start. But as you go through these things, you start thinking about, I want a yard, I want a pool, I need a separate laundry that's internal. I need internal access from the garage. I need all these little aspects of a home
that right.
You start sort of getting to, and then you start understanding the areas you're looking for, the value that is, so that when you come to a property that ticks all of your boxes and you go, yeah, it's got this, yeah, it's got this, yeah, it's got this, yeah, it's got this, and you go, okay, so they're guiding this, and the value, once we've got through all the comparatives, it's worth this. Okay, now I need to go in and have a discussion with the agent. Always indicate that you are interested. I don't know where the myth came from that you shouldn't, but at that point,
no sense in playing hard to get in real estate.
At that point, you can actually go for the property, and you can get it at hopefully below market value or around market value, rather than an auction value, which is something else entirely. Right?
That's its own podcast. That's its own discussion. And I think importantly, you've cottoned on to a really important factor there, and where this topic really converges with my area of expertise in mortgage broking is that valuation in terms of being prepared for the actual purpose of the purchase of the property. So the last place you want to be is you've gone through all the rigmarole of getting pre-approval with the banks based on what you thought or what the estimates of the value were, only to find that that's much higher than all the indications and all of the groundwork that you've already done. Then the pre-approval is much harder to update and to be in a position to, if it comes to auction, bid effectively and confidently. So that research, that understanding, and approaching the likes of either yourself as a buyer's agent or myself as a mortgage broker to get that expertise, that domain expertise, and say, this is what the bank's value is coming back to this. So I think understanding those figures ahead of time, and that the bank will have their own lens of evaluation of a property with multiple factors, that's what's going to determine your loan capacity and the likelihood of you being able to actually jump into this property that you are emotionally attached to, and that you do have that personal value, whether it be an investment or owner occupied.
Yeah.
And I think we spoke previously about that difference between owner occupied and investment, and how that could impact personal value or the other lenses of value. Do you want to talk briefly about how you see that play out?
Yeah. So, I mean, when you're talking owner occupier, there is an emotion attached to it. It is your lifestyle. It is where you're living. It is where you're potentially raising a family. It's where everything about your life comes into play. When you're talking investment, you're now talking in dollars and cents, right? It's, you need to remove your emotion from that, right? Loving your investment property, is that really important? Probably not. You need to love the money you get from it.
Yep.
And the growth that you're going to get from it. And you need to look at the data. And the data will indicate what kind of rental return you're going to get, what kind of capital growth you should expect over the period that you own it, and everything along the way that is going to add up to money in your pocket.
Most definitely. And I think that lens of it being a numeric decision, I think even when it's an owner occupied, going by the data and going by what you know to be backed up numerically is only going to help that emotional
Absolutely.
connection grow as well. Because when you've got confidence that you've bought well, that it supports your lifestyle, and it supports the spreadsheets, that's a good feeling.
Yeah, I think that's probably the line I'm trying not to cross, where, emotion is important. You shouldn't lose the emotion in your own home, but you shouldn't cloud your judgment either.
That's right. Yeah.
You absolutely shouldn't go, this is the thing that I love, this is the greatest thing ever. You need to be ready to walk away if the price doesn't stack up to what you want. And you know what, from my experience, every single person who buys, they buy the best place they saw.
Yep.
Right? Even if they've loved something else before and they felt sad when they missed out or they walked away, when they buy something, they go, I'm just so glad I bought this one and not that one.
Yes.
Right? It's the place they love.
Yep. Absolutely.
When it comes to the investment side, it's easier to walk away if the numbers don't stack up, and you move on to the next one. There will be another option. But I think it's also important from an investor's point of view. When you buy an investment property, I think you shouldn't lose track of the tenants, right? Part of me looks at this through my lens of being a former army officer, where I was renting a lot of different places. I think it was 13 places in 10 years or something. It was insane. But you notice the difference between living in a place that the landlord took care of versus a place that they didn't. And the ones that an owner took care of, I actually wanted to be there for longer.
Yeah.
Right? Now, if I'm there for longer as a tenant and looking after the place, caring for it, notifying when things need to be improved and when there are problems, that leads to greater capital growth for the owner.
Everyone.
It leads to a better property down the track, fewer fixes to make at the end, and fewer tenancy changes.
Yeah.
Except
less
in the
vacancy.
case of army, like, sure, I got moved. It happened.
Yep.
But, most tenants will stay if they're treated well, and therefore you'll make more money out of that.
Yeah. And that's, again, that convergence of some emotional connection where you can take pride in your possession, your asset, and make sure it's well maintained. And I think everyone around benefits when that happens.
Absolutely.
So there's some really great topics that we've covered. And if I were to extract some of the take-home points, and I'd love to get your sense check on them, I think that there are differences between guide values that will have a certain motivation or a certain purpose for them. There is the market value, which you can research based on past sales, either of that property or like-for-like comparisons in the area. And there is the personal value, especially when looked at through the lens of being owner-occupied. And I think that is equally important when it comes to mortgage broking, so that you can actually understand a realistic value point, so that there isn't a difference between what you are going to pay and what the bank sees of the value, to make sure that loan and leverage situation actually adds up on the other end.
Yeah.
But anything else from your perspective as a must-have takeaway from this discussion?
Yeah, not to bring up a new topic, however, but there is also the interesting aspect that whilst we mentioned auction as well, how there'll be a higher auction value. It's interesting when it comes to a bank valuation. More often than not, if a property is purchased at an auction, the bank valuation seems to match exactly what was paid at the auction because it's so public.
Yeah.
However, if you get it beforehand, you'll likely get a lower valuation. You'll also pay a lower price. But sometimes that's just not possible. Sometimes it is.
Absolutely. And for those out there, don't feel hard done by if you do meet yourself with an auction.
Yeah.
It absolutely happens, especially in certain cities, certain suburbs and locations.
Yep.
They seem to all go for auction in certain places.
I bought my family home at auction.
As did I.
Deceased estate. You had to. Right?
Yep, absolutely. Yep. And look, I think that can be its own deep dive. But for now, I think we've cottoned on to some of the important factors. And thanks for joining us.
Thank you.